Well, stocks flat as investors brace for the Federal Reserve's last interest rate decision of the year. Markets are largely betting that the next time the Fed does take action on rates, it will likely be a cut. But new research out showing that the Fed's pause period might actually be better for stocks. Yahoo Finance markets reporter Josh Schafer is here to break it all down for us. What do you have, Josh?
Yeah, Shauna. So a big story this year has been a lot of money coming into money market accounts as interest rates have been higher. And essentially, when should investors get out of those money market accounts? 5% on cash is great, but in the long run, normally being in the market does better. Should it come when we're in the pause period, when we're cutting? So BlackRock with this nice graph here that shows us the 6 months before the last hike, which have already passed, obviously, or at least most people think they've already passed, or what happens when we're in a pause period, which most people think is right now. A lot of people thinking July was the last hike, which would mean the pause technically started in July. That's how BlackRock did this analysis. And then you look at the 6 months after the first cut. So a lot of people obviously thinking a rate cut would be good for stocks, specifically stocks maybe that have been interest rate sensitive. But this research sort of telling us a lot of the rate cut positivity actually gets priced in during the pause period, which might be what we're in now. So BlackRock sort of saying it might be time to get out of some of that cash. And when we take a look at another graph, this is just stocks versus cash returns over the last couple economic cycles. So each new line here starts when we had a recession, and you can see 5 out of the last 8 economic cycles, stocks significantly outperforming cash and the interest that we get on cash. A final thing I want to point to here, when we take a look just overall what the S&P 500 has done since that pause started, you can see we've taken quite a big leg up here, specifically since September and October when we headed lower after that last Fed meeting. So we've sort of already seen this pause period trade playing out. Now the question for investors will be, do we see more of it if the Fed does stay on pause over the next couple months here?
All right, we're going to be watching closely for anything Fed Chair Jay Powell and everything Jay Powell says later on today. Josh, thanks so much for the breakdown. Appreciate it.